The time is 2 p.m. and welcome to another edition of Market View, ERS Text Talk right here on Eswatini TV. My name is Nathila Sitole. Glad to have you on the program. And in this edition of your trusted platform for clear conversations around taxation and financial compliance, today we want to talk about pay-as-you-earn return submissions and return submission and a payment. Pay as you earn, or payee, if you'd like to call it, plays a vital role in our tax system that ensures that the tax is deducted correctly from employees and remitted to the Eswatini Revenue Service. Today we want to learn about registration schedules, submission processes, payment processes, and deadlines, of course. And our guests will be ERS Director for Communications and Marketing, Dobego Dlamini, and Cebolenkosi Matlalela, Manager Taxpayer Education and Information. But first, our business stories. In our business stories this afternoon, value-added tax is one of the highest contributors towards revenue collections in the year 2024-2025, standing at 5.072 billion emalangeni of the total revenue of 14.612 billion emalangeni. This is according to the Eswatini Revenue Service's 2025 Integrated Annual Report released on Wednesday.
The Eswatini Revenue Service states that personal income and value-added tax are the highest contributors towards revenue collections, contributing 34.83% and 34.71% respectively. Individuals contributed 5.089 billion emalangeni. Company tax collected in the year 2024-2025 is 2.038 billion emalangeni. Under road toll, 5.072 billion emalangeni was collected. The service has stated that 64 million emalangeni was collected from alcohol and tobacco levy. From import motor vehicle levy, 11 million emalangeni was collected in the financial year 2024-2025. Fuel tax was at 1.34 billion emalangeni and 956 million emalangeni was collected in other taxes. Revenue collections for the financial year 2024-2025 amounted to 14.612 billion emalangeni against a target of 14.544 billion emalangeni. The Eswatini Revenue Service says the significant increase in revenue collection was a result of improved effectiveness of their operations. Some of the major contributors to the total revenue by sector in the year 2024-2025 include manufacturing, mining and quarrying, and other industrial activities, which stand at 27%. Wholesale and retail trade, transportation and storage, accommodation and food service activities stand at 29%. Economist Sanele Sibia says if the Eswatini Revenue Service sustains revenue growth above 10% and continues to ramp up compliance and enforcement efforts, it is well positioned to meet the 2025-2026 revenue target of about 16 billion emalangeni. He says equally significant is that the domestic revenue now exceeds SACCO receipts, marking a decisive shift toward greater independence, improved microeconomic stability, and reduced exposure to external shocks. Reporting, Nelson Dlangamandla Babane.
Sugar is the major contributor to the country's economy, contributing more than 5% to the gross domestic product. The cane growers are part of the force behind this booming industry. We speak to the Chief Executive Officer of the Eswatini Cane Growers Association, Dr. Sipho Ngambule, who gives an update of the performance of this sector.
Our membership currently is sitting at about 550 cane growers, people who hold a quota to produce sugar cane. And among the 550, you have got individual growers like you have at Vuvulani. And you also have companies, I think there are just over 120 farmer companies who grow sugar cane. Our financial year runs from April to March. So as I'm talking to you at this point, the year has not been concluded, but we do have close estimates. For instance, the crushing is practically complete, and the farmers have done their part. They have produced the sugar cane, and in terms of numbers, the yield of sucrose, which is the sugar contained in the sugar cane, is about 2% up year on year. But the challenge is that the price of sugar cane, of sugar has gone down. As a result of, though the yield of sucrose has gone up 2%, but the price that we get from the market is 4% down. So the net effect is that the revenue from the produce is going to be lower than the previous year, but the performance was very good. It's really driven by supply and demand. The more sugar you have, the less the price, and the less sugar you have, the higher the price. So we are coming from a situation globally where there was a deficit of sugar, and then as a result of the deficit, the price was high. To give an example, at some point, the global price or the world price of sugar was about 32 US cents per pound. And as I'm talking to you now, it's sitting at about 14 US cents per pound. There are a lot of drivers, but the main one is really the supply and demand.
And that is your business brief. After the break, we'll speak to the ERS. Stay with us.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
Welcome back. Thank you for watching Market View, ERS Text Talk, right here on Eswatini TV. Moving on with the program today, we focus on a very important topic for all employees, that is the pay-as-you-earn return submission and payment. To help us understand the process, we are joined by Ndobeko Dlamini, Director Communications and Marketing at the ERS, and Cebo Lenkosi Matlalela, Manager Taxpayer Education and Information. Ladies, glad to have you both in studio.
Afternoon,
Good. Because I'll start with you. What is pay-as-you-earn and who is required to register?
Good afternoon, Notsile. Good afternoon also to our viewers. So yes, today we are touching on pay-as-you-earn. What is pay-as-you-earn? So pay-as-you-earn is the tax that is expected to be deducted by an employer on behalf of an employee from the employee's remuneration or employment income. So Notile, for us to expect that there's a possibility of pay-as-you-earn to exist, we should, or rather there should exist these three components where there should be an employer, an employee as well as remuneration. Then if we have those three, we can expect that through the calculations there is a possibility for pay as you earn to exist. Now, coming to who is required to register for pay as you earn, we've already highlighted that once you are an employer, you are expected by the law to deduct or remit on behalf of an employee and submit with the ERS. So this simply means if you are an employer, then we expect you to register for pay as you earn. Employers could be any entity or authorities or a person who pays a person employment income. So these could be companies, these could be sole traders, it could even be trusts, even exempt entities. If they have hired employees, we do expect that they will register for pay as you earn. Note that this also goes as far as to small businesses. Even if you've had just one employee, for as long as we have an employer, employee, and employment income, which is remuneration, we expect that the employer registers for pay as you earn and will be guided on how to then go ahead and administer pay as you earn in terms of the calculations.
All right, thank you, Cebo. And David, I'll come to you. Where and how must employers be submitting the pay as you earn returns?
So pay-as-you-earn returns are submitted online. We've fully moved away from returns being submitted physically. We also have our service centers available should someone want some support and assistance in submitting that return. And then in terms of how they submit the returns, this is done by them submitting their pay-as-you-earn schedules on our platform, our self-service platform called Tax Ease. It's pretty simple. Employers just need to ensure that, number one, they are registered for pay-as-you-earn. Thereafter, they can access our Tax Ease platform, download the pay-as-you-earn schedule, where they need to complete all the documents required. They then upload that schedule back onto Tax Ease, save and submit. It's that simple.
So I'll go back to you. What about the schedules? What exactly should employers be including in the pay-as-you-earn schedule?
Okay, thank you so much, Natsile. One would like to highlight that when it comes to the PAYE monthly schedules, we expect that all employees must be included, regardless of the amount that they earn. We expect that you include all your employees. This can even go as far as if you have board members. We expect that you include them as well. Now, when it comes to what exactly are we expecting you to capture in your schedule, we expect that you'll capture name and surname of all your employees in the schedule for that reporting month. We also expect that one important component is the PIN, which is the PIN, personal identification number. This is a very important component because it speaks also, or it's linked to the functionality of rebates now when it comes to the calculations. So, and we want to encourage every employer to ensure that they capture correct digits, they get the correct PIN numbers of their employees, because also our system has the capability to also validate the PIN, as I've explained how important the PIN is. Another aspect or other details that we expect that employees capture in the monthly schedule is the actual basic amount or pay that that employee has earned in that month that you are reporting for, as well as all benefits that your employee might have been granted in that month that you are reporting for. We will also expect that you capture all statutory deductions for that employee for that month that you are reporting for. This could be your pension, this could be your ENPF, this could be your legal and all. We expect that you capture those in terms of the deductions for that employee in that month. So it's all those details, but more than anything, we expect that capture all your employees. I would like to repeat that. It's one of the common mistakes that we have seen our employers or clients practice. So we would like to encourage them that ensure that it's not about how much your employee earns. For as long as there's employer-employee, capture that employee in the schedule. It speaks to compliance and as well as accuracy when it comes to now issues of reconciliation. Yes.
Thank you, Cebo. My next one is for you, Ndobego. And once the schedule is complete, what happens thereafter?
So once the schedule is completed by the employer, they will then upload the schedule onto Tax Ease. And what Tax Ease does is it automatically generates a summary of that monthly return. And that summary will outline the total number of employees, total remuneration, as well as the pay-as-you-earn that is expected to be deducted. The system will then display the total amount that the employer needs to remit back to the ERS on behalf of the employees. And then once the employer can confirm that all of this information that Ngozi has already highlighted is correct, they can then select submit, and then that return is sent through to the ERS.
How should employers rather remit the pay-as-you-earn that they withhold?
Okay. I think Nobego highlighted when we started that we have gone digital, so we'd like to also remind our clients that we are available in all the payment platforms.
Yeah.
So if you want to pay for the PAYE that you've remitted, we have the facility of an EFT. You can make the electronic transfer to the ERS in terms of the pay-as-you-earn. We also are still available in terms of walk-ins in all our service centers, where you can swipe your debit card through the POS and make a payment. You can also make payment through the bank cash deposits. Yes, we're also available in terms of Momo Pay. You can also use Momo Pay to pay. I'd like also to highlight that ERS has bank accounts in all the banks in Eswatini. So please take advantage of that in terms of whichever bank that you prefer. For you to access our bank accounts, do visit our website and download the bank accounts. We are also available in terms of our app. You remember that we've been educating our clients about ERS TaxPal. Please download ERS TaxPal. You will access all our bank accounts and be able to make payments anytime, anywhere, for as long as you have connectivity.
The ERS is certainly digital. Make sure to download ERS TaxPal. The other ones for you as well. Deadlines. Often we hear you miss your deadline, there could be penalties, there could be interest. But what are the deadlines that employers and employees need to be aware of?
Okay. When it comes to the monthly pay-as-you-earn return, I would like to remind all employers in Eswatini that the deadline is the 7th day of the following month, following the month that you are remitting for, with an exception of 7 days extra, which is grace period, which means the ultimate or the final due date for you to make your submission is the 14th of the following month. So I'd like to make an example that you are submitting for a period of January 2026. We expect that the schedule and the payment should have been made by the 7th of February 2026. Yes. In case you missed the 7th, you have a grace period of 7 days, which now goes up to the 14th of February 2026. Unfortunately, Notsile, if our clients for some reason miss these deadlines, there are penalties, and there's a daily penalty of not filing, which is 200 malangeni per day. I would like our clients to please avoid these penalties by doing things on time. And lately you will see, I'm sure you recall also from the news that the law also allows us to go as far as prosecution, and no one wants to go to that corner. I mean, it will tarnish your image and all. It's not a good sight, and it can be avoidable. So we would like to encourage our clients to avoid doing things late or waiting for the deadline, by all means. And we are available to support should they need assistance from our end. We are available to support them.
In as much as there is the grace period, pay on time, you want to avoid the 200 emalangeni daily penalty. I wouldn't want that. Ndobego, parting shot, what would be your advice for ERS clients or employees?
I think one of the most important things we want to highlight, particularly for employers in Eswatini, is to ensure that they are registered for pay-as-you-earn. Earlier on the show, you had highlighted some of the figures that have come out of the integrated annual report. Pay-as-you-earn is one of our most highest revenue collection tax types, following VAT, I think. So it is quite important for us, and we just want to make sure that as our employers are filing their monthly returns, they remember to ensure that they input the accurate details that Gabo had already alluded to. The personal identification number is also quite important, making sure that that is accurate. Like we mentioned, the system does validate validate the information that the employers upload. So if there are any inaccuracies, it does cause delays, and we obviously don't want that for our employers. But just also as a parting shot, we do want to remind our employers that if they do experience any difficulties, our teams are here to support. We are available telephonically on 2406 4050, or via email on info@ers.org.za, and then we do have a WhatsApp line that our service teams mans, which is 7606 3735. So the platforms are there. We are there to support. All we need is our employers to reach out should they need that assistance.
Ladies, thank you both for your time. 2406 4050 is the number. Be sure to reach out to the ERS. That was Tsibo, Lenkosi Matlalela and Ndobego Dlamini, both from the ERS. And today we were discussing pay-as-you-earn return submissions and payments, and of course the deadlines that you need to be mindful of. The show continues after this.
To all the viewers of Eswatini TV in the kingdom and beyond. Eswatini TV is regulated by the Eswatini Communications Commission through the Broadcasting Code and Broadcasting Guidelines. Under these instruments, the station commits to broadcasting information and news that have been fact-checked, programs and content in respectful language with no elements of hate speech, violence or sexual activity. If you hear any unsuitable content on this channel, you have a right to voice your complaints with the station management. Should you not be satisfied with the response or action taken, you can escalate your matter to the Communications Commission at PO Box 7811 Babani. Call 2406 7000 or send an email to info@esccom.org.za. For more information, visit www.esccom.org.za.
When you choose your adventures, you do so with an open heart and a desire for the unexpected. You embark on journeys to discover new worlds full of wonder. You choose a path to awaken your senses, a world to make you look up and realize just how inspiring this life can be. Arrive and awaken your heart. Explore life in ways only thought possible in your dreams. Discover just how far you go to expand your understanding of life's greatest mysteries. There's just one place on this planet with so much to offer. Now is the time for you to have the royal experience.
Welcome back now for our market analysis. In-house economist Sanele Sibia joins us virtually. Mr. Sibia, good afternoon. Thank you for your time. Before we talk markets, news just in, there's been AGOA renewal for African countries. Where does Eswatini stand?
Good afternoon to you, Notsile, and also to the viewers. So what we're seeing with AGOA is a 1-year extension. So what that means is we should expect to see continuity amongst those industries that are already sending commodities into the US, and we still don't have that duty-free access. But in terms of, overall FDI attraction into the kingdom. We're most likely not going to see too much of that, given the fact that AGOA now renews annually, so it does bring uncertainty, and it makes for the planning horizon to be very short. But we do have the 10% tariff into the US, so we should expect more benefits in terms of new FDI to come from that. But the current AGOA extension should actually just be more on continuity.
Thank you very much for that one, Mrs. Bia. Let's move on to markets. We are seeing tech sell off, especially this week, more so today, actually. What's driving that?
Around the tech issue, Notsile, is a couple of things. Number one is the interest rate issue. We're seeing coming from the Feds, a kind of hawkish sentiment around the interest rates. So what that means is, it makes borrowing and all those costs remain very high for longer. And then also the fact that we've seen the likes of Alphabet and with Alphabet, posting around I think a couple of hundred of billions to say they're going to spend that on infrastructure. Now, what that sends to markets is a signal that we are nowhere near turning a profit amongst the AI giants, and that is what is pulling markets back. And it is quite evident on the major pullbacks, because like the likes of Nvidia and quite a number of those tech stocks, in terms of also those earnings reports, are still not yet at the levels at which markets would want those to be. So now that is what points to that sell-off that we're seeing in the US. When you look at indices, it's only the Dow Jones Industrial Average that has actually gained 260 points in trade today, signaling a shift by investors to those traditional defensive stocks and the traditional blue chip stocks, because markets are waiting and getting jittery around AI and when we're going to start a profit. So there's even talks of a potential AI bubble, but we need to wait and see how that plays out. The Nasdaq is back on 22,000, losing 350 points, and the S&P 500 has actually pulled back 35 points, largely due to that AI sell-off and those jitters in markets. Coming into the European markets, what we're seeing again is just a bit of losses in the UK and also in Germany, with France there gaining some 9.62 points, just largely because the French stock exchange is largely, a luxury good listing, and also those defensive stocks that we're seeing there. So they continue to be the go-to, the go-to investment destination. While the UK, we're waiting to see those issues of the Bank of England holding the interest rate steady, but there are also issues around the export destination for Japan, as we're seeing structural issues with the Chinese growth targets. And then when we move into Asia, the Nikkei there is holding steady at 53,818 yens, just pulling back 475 points in today's trade, largely driven by the political uncertainty and the overall weakness of the yen, and that technology sell-off is actually having impacts there. Within the Hang Seng, we're seeing it pulling up some 37.92 points, largely reflecting the fact that there are expectations of, some stimulus to come into the markets in the autonomous region of Hong Kong. In Shanghai, there are those structural worries around growth prospects for the Chinese markets, and also it's reacting to the AI sell-off that we're seeing across the globe. So we're seeing the Shanghai Composite Index, pulling back 26.29 points. In terms of the South African Stock Exchange, we're seeing a pullback of 1,694 points there, largely driven by that sell-off in the tech stocks, and also the fact that the price of gold is actually, pulled back to $4,881 per barrel. Now, that is what is pulling back the Johannesburg Stock Exchange. Eswatini Stock Exchange, we have not seen any movements. In terms of the commodities, gold remains at $4,881 per ounce, largely pushed by the fact that, we're seeing those hawkish remarks coming through from the Feds in terms of keeping interest rates higher for longer, and then also the Bank of England keeping interest rates constant. What that now sends is a signal that, there's still more money to be made in those interest-bearing assets, and therefore there's a less demand for gold as a safe haven asset. In terms of, the Brent crude oil is now sitting at 68.63 points because we've seen a renewed onslaught of Russian efforts on Ukraine, and those peace talks remain in limbo there. And there's also the Iran story there. There is a bit of instability amongst the major exporters of oil. And then in terms of the currencies, the Lilangeni is weakened across the globe, largely being pulled back by the decline in the price of gold. We are trading at 1616 emalangeni per dollar, and we're trading at 1905 emalangeni per euro, and trading at 9.75 Japanese yen per lilangeni. Thank you, Natalie.
Thank you very much, Mrs. Bia, for your insights. That was in-house economist Sanele Sibia sharing insights on the day's trade. This has been Market View ERS Text Talk. Thank you for your company. Until the next edition, take care.